based on current financial conditions of regional banks.
Question is, more banks could go under?
It's too early to tell how far the crisis will spread. The chief executive of the world's biggest money manager has warned that more banks could collapse, as Swiss regulators were forced to reassure investors that Credit Suisse was not at risk. Larry Fink, the chief executive of BlackRock, said the recent failure of Silicon Valley Bank, Silvergate and Signature Bank in the U.S. could be the start of a slow-rolling crisis that may see others fail. As shares in Credit Suisse plunged by as much as 30% on Wednesday, triggering a wave of panic and speculation that it may be forced into a bailout. The problems of certain banks in the USA do not pose a direct risk of contagion for the Swiss financial markets, but pledged to provide emergency liquidity support for Credit Suisse if needed. The U.S. Treasury said it was monitoring the situation and was in touch with other officials around the world about the crisis. Credit Suisse has insisted its finances are sound, but investors are growing increasingly nervous about the banking sector after the recent run of U.S. failures. Mr. Fink, who oversees $10 trillion of assets at BlackRock, said recent bank failures in the U.S. were the price of easy money, and warned there could be more domino effect. This past week we saw the biggest bank failure in more than 15 years as federal regulators seized Silicon Valley Bank. This is a classic asset-liability mismatch. Two smaller banks failed in the past week as well. It's too early to know how widespread the damage is. Banks were running into difficulties because of higher interest rates, which were putting pressure on the business models of some lenders. Interest rates have risen rapidly in the U.S. over the last year. The collapse of smaller American savings and loan institutions in the 1980s and 1990s ultimately cost the economy $160 billion. Easy money and regulatory changes will cascade throughout the U.S. regional banking sector, with more seizures and shutdowns coming. Some banks would now need to pull back on lending and shore up their balance sheets. Credit Suisse sent shockwaves through European stock markets. Credit Suisse has lurched from crisis to crisis, and the worsening economic backdrop has triggered fears it may be forced into a bailout. Concerns about a possible global banking crisis rippled out across the market. In some countries, people are actually over-saving but under-investing. If they are keeping their money in the bank rather than investing in the market, they won't generate the returns necessary to retire with dignity. In a severe crisis, the central bank would undoubtedly flood the economy once again with boundless streams of money. The only question is when it will have to start. Will the Fed keep tightening as banks fail? Do you think more banks will fail? Comment and let me know your views. Thanks for watching. Please like this video and subscribe to the channel.